Hi everyone, it is Monday. It's 10 to 2, early afternoon, and it's Monday the 20th of September, and I am doing my weekly analysis on starting with the dollar index and looking at the major currencies. And so we'll start off with the dollar index. Alright, so it's taken a while, but we have now done, in my opinion, the minimum kind of healthy retracement that we were overdue to do on the weekly, which puts us back into this blue area that I've been talking about. We're now headed up towards 95. Which for me is now the 50% retracement heading up towards 618. Basically, if the US dollar is ultimately going to resume and maintain its downtrend to the downside, this week is going to be that area, or at least potential for it to close as a bearish weekly candle and then potentially head lower. I see and note that it is heading up against, obviously up against 95 is a significant monthly level. Once it breaks through that, it starts to head up closer towards obviously 96, 97, but this is really a challenge. The question is it going to be able to get past this? And so that's what I'm going to be looking for this week, is for the US dollar to do a swing higher turnaround, potentially produce a bearish weekly candle, the break of which the week after next, which would probably be that first or second week of October, would be an implication the US dollar is going to resume or go back to its downtrend. And so what I'm going to be looking for over the next couple of days, even over the next 48 hours, is to see if the 4-hour time frame starts to encounter resistance and potentially starts heading into a downtrend. Even perhaps a big significant rejection on the daily by the end of the week would be a solid confirmation of that. So that's a big thing, and unfortunately I won't really know until next week what the implication of that is overall, but certainly in terms of trading opportunities, especially if I go across to the euro dollar, this is where I find it quite interesting as well. The euro dollar, in my opinion, has got to go a little bit lower. It hasn't reciprocated with the dollar index. The dollar index is now at a point where potentially it can now turn, but the euro dollar hasn't really even come down to 1.15, which is what I was expecting, especially after this long consolidation. So I'm leaning towards the euro dollar heading further down first before recovering, which implies that dollar index is potentially going to bump its head up against that. It doesn't have to. Actually, to be fair to the euro dollar, it is within the moving averages here, and so it is in a very fair point to produce a bullish weekly candle, which supports the idea of that potentially heading higher. There's just some disconnect between the dollar index or the dollar basket and the euro dollar. Now, this is really where it should be, because the equivalent on the dollar is there. But doesn't matter, they're not 100% inversely correlated. If anything, this sort of implies that the euro dollar is quite strong, but at the same time it has gone through this very sluggish breakdown. And so that's really what I'll keep an eye on. My expectation, as I said, primarily plan A, is to see the euro dollar continue to head down. But it is ultimately in an area where if it did finish with a bullish candle by the end of the week, I would be okay with that. It does mean I have to be cautious on my trades, my shorter term trades. There are no established trends. The market is effectively swinging between a correction, a retracement, and a potential change in that correction back into resuming for another leg up. So that's why it's in a difficult place. Looking here at sterling, so sterling there were some very quick swing opportunities here, not massively profitable. It has actually now starts to look a bit more bullish than bearish. So actually at this point, within its uptrend, it's a breakthrough of resistance coming down to test it for support, especially if we finish with a bullish candle here. That does support the idea of a stronger sterling. But noting on the monthly, it's at the top of a range. So this definitely has that conflict, and definitely for me implies higher risk. Okay, because of the shifting mechanics, there's a disconnect between the weekly, the monthly, and the daily for the euro and GB and for sterling, and therefore there's a potential shift in those dynamics. I think it might be worthwhile doing an update on Wednesday to see where the market has started to work towards that. Okay, then having a look at Aussie dollar, US dollar, it's come back down to monthly level of support. And this is a good to test that, obviously, as previous resistance and support, to test it as support, so that could potentially happen. Also a weekly retracement, and a bullish candle forming here supports the idea again of that dollar ultimately setting up to head lower. It's had a big move to the downside. It is absolutely due for, well, it would be normal for it to have a retracement back up here. There might even be a fib level there, and therefore that could test it for resistance. So what we might actually be in for is the third option, which is basically ranging for a period of time. Maybe we start to get price retracing as though it's going to set up, and then it just, the markets just go sideways for a few weeks. That is also a possibility. I know that sounds like I'm not really picking anything. I'm going to talk about what I'm actually going to do on that. So the Kiwi dollar here has struggled to go higher than this at this point in time. It's back down at a level of support. Overall, Kiwi dollar looks weak. It doesn't look strong. If it breaks below the 0.65 level, I think it's reasonable to expect the price is going to head way down towards 0.62, and therefore there might be shorting opportunities. What I would need to see, of course, is a break below that level of support, and then a retest potentially, and shorting opportunities to the downside. So this really implies potentially a stronger US dollar, weaker Kiwi dollar. It's looking more bearish because of the strong resistance here, that bearish monthly candle. It doesn't really make sense that Kiwi would drop that much lower and Aussie dollar wouldn't. They generally tend to go roughly in the same direction. But this looks way more bearish than bullish or sideways, but it doesn't look bullish. It looks sideways, bearish, effectively. I think it's worthwhile to do an update on this around about Wednesday evening. That'll start to clarify if this is broken lower. It'll start to give some clues really as to how this week, because as I said, it's only really the end of next week that's going to start to bring some clarity on that. So I was also looking for some turning points here on dollar yen to head lower. As I said, that it's creeping lower. I do believe the Bank of Japan is going to try to keep it above this level. But that doesn't mean, and this is the thing about the markets, is they can do what they're going to do. So if the market ultimately wants to break below this level, there is a possibility of it doing that. And so therefore I might be looking for some swing entries. I can update this and just move it across here and say put it potentially here, which is a nice little bearish indecision candle if that's how we close today, and update this towards today. So then that becomes my potential swing high, looking to make profits as we head towards this level. But this level has to be broken for me really to kind of see that. And that supports a weaker US dollar, stronger yen. Dollar Swissy. Okay, so dollar Swissy overextended to the downside. Monthly level support has confirmed a swing low, and therefore looks like that's going to be bullish. That supports a stronger US dollar. So we've got weaker US dollar and dollar yen, stronger US dollar, dollar Swissy. Dollar CAD in a solid uptrend, confirmed uptrend on the daily. But it's a weekly retracement in a weekly downtrend, and it's off a monthly level of support. So just completely mixed signals here. Probably likely to continue upwards to this next level, so potentially going to stay in that direction, but just as a mishmash at the moment. So just to recap and have a look at this, my expectation certainly with the dollar index is in this area. It is now overextended on the daily and definitely potentially due for a retracement, which could potentially produce a bearish candle by the end of the week, which would be a potential setup for the following week to resume the longer term downtrend to see that US dollar heading lower. So that kind of clarity, unfortunately, I will have to wait to see what the weekly candle ultimately looks like. In the shorter term, my expectation is cautiousness here as the US dollar could continue up, then change direction. I'll be monitoring the 1 hour, the 4 hour time frames to see if that turn is going to happen. This is a really good place for it to do it. It's a significant level. It's a nice solid number. It's already overextended, and it's potentially a fib level. So this area is a decent, reasonable, rational area as well for it to potentially turn on. And if it does that, that might indicate ultimately that monthly is going to resume and head down towards 90, which would be the next most significant level. So that's what I'm going to really be monitoring there. The individual currencies are showing mixed signals. So basically we have mixed signals across the board. And I think when I write this up, this means I'm going to have to come back and have a look at this in a few days' time to see what is going on. This is potentially stemming from just the general anticipation of the US elections on the horizon on November 3rd.